Thank you. Thank you, John. Good morning, everyone. My name is Anushweta. As our host so kindly introduced me already, as she said, I am the regional lead for Carta here in the Middle East and Africa, looking after our business vertical specifically for private funds in the region. Before I let our very esteemed panelists introduce themselves, maybe I give a quick overview of Carta for those of you in the room who don't know us. Carta essentially is a service and a software platform that connects the three nodes of the private market ecosystem. So think the founders or the companies to the investors and the private funds and to their LPs. In terms of credentials, we have about 50,000 portfolio companies on our platform across 160 countries worldwide. They use us for cap table management, valuation services, and so on. On our private funds vertical, we have about 9,000 plus private funds and SPVs that represents over $160 billion of assets under administration. And last but not the least, on the LP side of things, we have about 200,000 LPs just on our platform. So yeah, very excited to be here, very excited to be moderating this panel. And I'm going to pass it on to John and Steve. Well, I don't think Steve needs to introduce himself again. But you know what, John, why don't you kick us off with a quick introduction on you and perhaps Hatcher Plus while you're at it.
Sure, thanks very much. And we're users of Carta, by the way, so we're very familiar with you guys. And love Peter Walker, his fantastic insights. So my name's John Sharp. I'm the co-founder of Hatcher Plus. Hatcher started as a venture capital company back in 2013. And by 2016, I was deeply convinced that venture capital was the most data-free, process-free business I'd ever been associated with. And so myself and my partner started building some AI and a process automation to take care of that for ourselves. And then during COVID, around about the same time as as just pre-release of ChatGPT 3, people started finding out about us and thinking, I should automate my venture capital business. I should create some robotic process automation around my fund admin or my asset management business. And our commercialization started for these tools that we do. So now with Hatcher, you can create funds, you can build tech stacks, and you can invest using AI. Those are the three things that we enable. And you can just go on hatcher.com and download that and use it for free. So that's what we do. But we also have a venture capital fund with 430 investments in it. That's doing quite well. The second cohort of our second fund is in the top 3% of venture capital funds globally, which we're very pleased about. And so we know a little bit about that after 15 years of doing it, but there's still mysteries involved in venture capital, which I'm going to explain during my keynote later on. We've done a lot of research in that area to kind of try and demystify it, and hopefully I'm going to share that with some of you investors today, and maybe you'll be able to pick up some insights from what we've found during our research.
Just in case anyone else has walked into the room after Steve gave that presentation.
So obviously Steve Torso, Wholesale Investor. I suppose I'm fortunate enough the position that I'm in, I get to see a lot of opportunities. Like every day I'll speak with anywhere between sort of 8 to 12 founders and fund managers. And, you know, the perspectives which I've been able to see as far as from a trends, I think super interesting. Like I said, I've been in this space for 16 years. I've never been as excited as what I am now about what's coming down the pipeline and the opportunities for both investors and founders in that.
Amazing. Okay, we're going to drill into that point. But okay, before I start off with actual panel questions, I want to start this with a global pulse check. You've done a great job already of giving us that presentation, but I think we are navigating a very unique macroeconomic environment right now, globally, regionally as well. So I guess I'm going to start with you, John, right? If you had to tell us, what do you think is the single biggest inflection point or challenge that will be defining the global venture landscape in the next maybe 12 to 18 months? So maybe the next year and a half. What would that be for you? And Steve, you're going to be thinking about that as well, and then giving me an answer on that.
I think Steve already sort of painted the road for this, but look, obviously it's AI. I mean, someone was saying on LinkedIn yesterday that $27 billion has been invested in the last year, and they can't see the point of investing all this money. And I'm thinking to myself, that's 3% of G42's budget. Yeah, less, right? So give me a break, right? 27 billion is absolutely nothing in the grand scheme of things. And if you look at the billions that it took to create the defense industry, the space industry, the health industry, the food industry, the car industry, all these massive industries that we now take for granted, these were tens of billions, hundreds of billions in their day, the railroad industry. So the amount of money that's been spent on AI to date is nothing, and the benefits that we're seeing are unbelievable. Right, so my business runs on AI. I would have to have 20, 30, 50 more people to do it, and I wouldn't be able to achieve scale without it. And the insights that AI enables you to pull from the rest of the world, from Carta research, from all these other people that do research is phenomenal. It synthesizes this approach. If you notice when you search on Google, it gives you lots of different references to different individual sources of information. When you search for a question on ChatGPT, it synthesizes an answer from everything that's ever been discussed in that area. These are two entirely different beasts. It's a different mechanism. So ChatGPT is synthesizing me an answer for the entire world, and Google is giving me a collection of stuff, including several sponsored links that I've got to go through on the first page before I get to the first answer. So what AI is doing is giving me a synthesis of all the knowledge in the world. And that's not just me. That's any worker on my team or any worker in a factory somewhere that needs to understand how to do something. They get an instant answer, which is, think of how difficult it used to be to find a user manual for your washing machine. And now you go on ChatGPT and say, my washing machine seems to be making an unusual noise. And it will give you all of the information on exactly that model of that particular piece of kit. So the synthesis of knowledge that is available to us now is phenomenal. So for me, it's AI.
Beautifully put. But Steve, I'm going to throw another angle to this, if that's okay. I know I'm putting you on a spot here, but you have exposure, and you just spoke about all the different countries in which you've been hosting these events at, right? So how would you also, on top of what John just said, how would you kind of describe the current evolution of the UAE venture market or the UAE venture capital market so far, and how it differentiates from the other regional hubs such as the Londons, the Singapores of the world?
You mentioned the two perfect countries for that. So the best way I can describe what I feel like when I come here is that I feel like right now Dubai reminds me of what Singapore and the UK were in 2014. Like there was just so much, like here, just look around. Like this is the melting hub of what, like why I think why I love this city is that it really does exemplify what innovation, capital, and ambition actually look like. So, and it's also still very early days. The first time I came to Dubai was actually in May this year, and I had this perception that it was likely built out. And then I realized as soon as I come here, as soon as I went around, spent time going around, there is still so much more opportunity going forward. And then likewise with the region, everyone wants to come here, as far as from companies in Australia, companies in the UK, everyone. It exactly reminds me of back in 2014 when every company wanted to either go to the US, Singapore, or also to the UK. That right now is the Middle East. Now, to answer the first question, because I think I'm going to give an insight, like for me, I think Raoul Pal's content around this, where he talks about his sort of everything code, I think is a really good content for what to look for from an investor standpoint, is the combination of the interest rate reduction as far as being signals, because the more interest rates gets reduced out of the US, obviously the more money that's going to be coming off the sidelines and then back into the sort of ecosystem. And then also the common thing he's been talking about is that there's a strong correlation between asset values and the amount of sort of liquidity that governments are pumping into the system. Now, given all the sort of major developed nations have to actually refinance their sort of outstanding debts over the next couple of years, there's going to be a whole bunch of capital raising going on and a whole bunch more money sort of coming into the ecosystem. So once again, my thesis around why I'm so bullish for growth, high growth, and then high yield, I'll say the high yield part really relates to Australia. Australia's interest rates aren't coming down any soon. I'm a bit bearish on our Australian government, but that's a whole other discussion. Any Australian will understand this reason. But actually, part of that is it does mean that there's a massive opportunity in private credit in Australia, which is, for us as a company, 50% of our clients now are fund managers, and a lot of that relates to investors being able to access sort of high yield. So the foundations are there. Those two aspects that I mentioned, as well as potential for interest rates coming down, global liquidity from governments needing to raise capital to sort of pay, for the sort of refinance their debts. That is just fuel to a fire. And you add AI on top of that and the convergence of all the different technology platforms, it's an exciting time to be in this space.
That's very, very well put. John, would you like to add anything or?
About Australia? No. I think I very much concur. So I just moved here from Singapore. And so people sort of say, well, why have you moved to Dubai from Singapore? I mean, Singapore's got a great startup ecosystem. Singapore's very known for being very modern and what have you. But if you look at the AI landscape, our business is based on AI. If you look at the AI landscape, the top AI center of the world is still the US, right? And particularly like the south of the US. So that's where all the data centers are. Guess where the number 2 is?
UAE.
Right here. Guess where the number 3 is? Next door. It's just in Saudi yesterday in Riyadh. If you combine the Saudi and the UAE AI capabilities, it's bigger than the US. Can you believe that? So why am I here? I'm here because I want to be right next to that. And the AI centers are here because they need to be right next to the lowest cost energy in the world. So who wins, the UAE versus the US, in the energy cost aspect of AI? But this is massive. People don't realize that AI is essentially just transformed energy, right? You're asking a question, it cycles, it uses electricity, it gives you an answer. So the best place to be in the world right now is the UAE, right next to low-cost energy, next to the availability, the best availability in the world of solar, which the UAE is spending a lot of money on developing, and they're really dedicated to it. So this is the hub for AI going forward, in my opinion. That's not the only reason I moved here. I love the place. But from a business perspective, I think that's a really good reason to be based here.
So I concur to all those thoughts. For someone who's kind of not born, but brought up here in the region, it's really exciting to see the way the region's growing, Dubai, Abu Dhabi, and the UAE in general, and that kind of flows into the overall MENA region as well. So I'm going to stick with you, John, because my next question is really bringing in insights on how you currently use your data-driven approach to investing in the VC space. So how do you think and you touched upon this, but how do you think the UAE is positioning itself as a hub for technologically enabled venture capital investing, whether it's when they're using AI, which you already mentioned, but also data analytics to actually enhance the investment decisions they're making? How do you see that in the VC space right now?
Yes, I think Steve's presentation, great question. Steve's presentation touched on this in that, if you're a startup right now, you absolutely have to have access to AI, which means you need to be in the US or here or China to make your business work. And so obviously the kind of what the UAE has said is they want 10,000 AI-enabled companies in place by 2030. I don't know if you guys know this, but this is government policy. This is the Minister of AI. So 10,000 startups that require capital, employees, access to data centers, access to data, are going to be created in the next 5 years. That's another astonishing reason to be here. So obviously that's one trend. And now you look at what's underpinning that or what kind of businesses these will be. This is also an energy hub. But how many people live in the UAE? Yeah, lots, right, that are here. Every one of you, so I'm a relatively new resident, been coming here for decades, but I'm a relatively new resident. And someone said, why are you walking to the supermarket? Just order stuff from noon, right? I'm like, yeah, I shouldn't walk to the supermarket. It's hot. So I started ordering stuff on noon, and now I'm totally addicted. This is a delivery and logistics amazing place to be, right? It's probably one of the most amazing places to be in the world. It's an amazing, centralized kitchen hub of the world, right? Everyone's like using these centralized kitchens, centralized logistics centers. So the kind of startups that can thrive here are all the kind of modern ride sharing, centralized kitchen, delivery, logistics, AI-based companies that are the companies that we all want to invest in. Why? Because they can achieve scale, right? Whenever we're given something, it's a small kind of company as investors, we always think, you know what? it's kind of a small company. It doesn't have that 100 million, $1 billion market possibility. But a lot of these logistics companies, AI companies, data companies, these companies do have that $100 million market pop that they can grab as a share. So I think this place has lots of examples of potential success. Of course, they have to fight it out, and you have to get to the winners. You asked me how our system finds winners, by the way. We have a thing called the Hatcher Score, which we've been developing continuously for 9 years. We recently, I'm going to show you this during our keynote, I'm going to share with you some research that we've not shared before on this. And what we do is we test any new company against a database of 700,000 companies that are out there, and we look at what is trending and what the capabilities of the CEO are and what's happening at the company and what the market size is and all these different things. We have 75 different AI-based models that we apply to figuring out, is this company investable or not? So we can use AI to figure out what's going on inside these companies. And we've just licensed this to 2 massive ecosystems, one that begins with soft and the other begins with micro. So those 2 groups are starting to use our AI to screen deals now. And to pilot the use of AI to screen deals, which is really exciting. So you're going to see a lot more of this kind of innovation happening where we don't just have to rely on our own human biases anymore. We can rely on the AI to figure out what's trending, what's good, that's out there. And I'll tell a couple of stories about this during my keynote, but there's some surprising things the AI is capable of finding that blew me away as a human.
Very excited for that keynote. Steve, I have a follow-on question for you. What, as per you, is the single most disruptive trend right now that is forcing, and the word forcing, LPs and GPs to really rethink their traditional investment strategies? And maybe how it also applies to the region, if you wanted to add that in.
I don't know if I can say how it applies to the region. I think the most interesting force that I've sort of observed in Australia is the later stage VCs that have actually previously invested into companies during that sort of 2017 to 22 run that have basically pumped in tens to hundreds of $1 millions into startups. They're really struggling. They're struggling to get exits. They're struggling with their companies not actually moving towards sort of more utilizing AI across their company. And I think right now you've got companies that are effectively at 2 different speeds, where companies that were able to easily raise money in 2022 and 2023 have effectively not made the adjustments and basically, let's be blunt, scaled back their workforce and then leveraged AI across their business. And so you're seeing that, and also I'm also seeing that in PE as well. So the biggest difference that I've seen, it's really obvious. You can see that when companies have either been forced to utilize AI across it or have not, there's a big there's 2 different speeds that the companies are going at.
And I can maybe add to that from a regional VC's perspective, because I deal with the private funds here quite a bit. What you're doing, or you're successfully doing, I think a lot of VCs here in the region, or even private equity players, they're trying to embed AI into their due diligence phase at the very least, as you are. How successful they are or not, only time will tell, but definitely an adoption for AI in their investment, during the investment due diligence phase. The other trend that maybe regionally that pops up is there is an enhanced governance need that's popped up here as well for the sovereigns that are funding into the VC space. Historically, it wasn't really something that involved greater governance play. Like the sovereigns would put in money, the reporting would go out as it would. Now there is a huge need for VCs to have really strong internal regulatory like processes and just governance processes in place to attract the institutional capital.
Yeah, you're so right. We're just talking about this over breakfast. I don't know if many people here are aware, but many countries in the world are either getting ready to pass or have already passed data sovereignty policies. What does that mean? It means that if I do KYC on one of you guys as an investor and you're sitting in South Korea right now, that data has to stay in South Korea. I'm not allowed to store that outside of there or I face huge fines. And so I can access it securely for 15 minutes, to check on that data and whatnot. But this is now going to start to apply, my reading of the policies, this is going to apply to data your entire data bank is going to be sitting inside the UAE, accessible only by secure sessions outside. What this means is, and I'm not sure the legislators are completely clued in on this, is it means massive data centers that need to be created inside the countries under the control of the government. But then you need governance technologies that can reach out and create a framework of understanding what's going on between all these data centers you can only access securely. By the way, that this is something that very few of the KYC vendors that we work with, and we have 160 apps on our platform, about 5 of those are specialty KYC apps. One of them is compliant right now with this data sovereignty law. So this is something that's coming down the pike really, really fast, and not many people are aware of it. So you're absolutely correct. The governance side of this also needs to become AI-driven and also needs to become intelligent.
Okay, I'm also conscious of time, so I want to move towards move our focus towards the actual sectors or the companies themselves that private markets are now investing into. The UAE obviously has become somewhat of a magnet for innovation, focusing on AI. We brought this up so many times now, but fintech and sustainability plays are also very, very top of mind for private markets here. So, and we're also seeing lots of founders who are moving into the region and VCs apparently as well. So recently, as for everyone ideally in this room, you guys know this, the co-founder and the CEO of Revolut moved his residence from the UK to the UAE. So John, maybe I start with you. From your perspective, how do you see these sectors, fintech, AI? Maybe we stay clear of AI, we've spoken about this. But fintech and sustainability kind of aligned with the global investment trends. And what are the most promising opportunistic areas that investors should be looking at or will be looking at for the next 3 to 5 years?
Sure. I'll briefly touch on sustainability because we've made a few investments in that space. And one of the investments we made in is with a company called Verdana that Lee is associated with as well. And they're also starting to work here in the region. But the great thing about sustainability here as an investment thesis is the government's going to back this for the next 25, 50, 100 years. They're not going to change their policy on it. Whereas if you make investments in certain other countries I don't need to name, the next government may completely nullify all of those investments that you've just made in decarbonization or carbon credits or whatever you've invested in. So this is a great region to invest in sustainability because the Saudi Arabia, I think, is the second leading investor now in sustainable technologies in the world. The UAE is also got a huge amount of investment going on there. These are 2 very sunny places, so they're very good places for renewable energy that don't face the challenges in other parts of the world. It's very cheap here to build the kind of renewable energy infrastructures that you need. So sustainability is a great theme. The second, and we will stop beating AI to death. FinTech is I was chairman of a payments company here. We had a pretty decent exit. It was called Teller a few years back. And this was the first and leading merchant payment system. And what we saw was this massive rise in merchants while we were building out Teller from a few tens of merchants to thousands of merchants on the platform when we finally sold it. And it's a very successful company, but our partner at the time was Network International, another very successful fintech company based out of here. And so you can look around the region here and you can see neobanks, you can see crypto, you can see all of these fintech companies, including some of the Web3 companies doing very, very interesting things with the full support of the government. Most of the time here, when you're asked to invest in a crypto company, they're based somewhere. You go, is it legal where you are to do what you're doing? And they kind of go, well, it's kind of going to be legal at some point. You don't have that problem here. You can invest with full knowledge that the policy is supporting you in these sustainability investments and in these fintech investments. So I'd say that these are 2 very robust, very good areas. I can speak from personal experience. We've done very well in both the fintech and the sustainability areas.
So my other favorite sector, I sort of touched on a little bit, but I think one of the biggest opportunities over the next decade is actually going to be in the life sciences and medical device area. If you look at life science and medical device, the actual biggest challenge is how much money is required to figure out basically where they get, when they actually go into the clinic and actually start doing trials, where effectively now for whether it be drug discovery, drug design, trial design, all those areas now become a lot easier for a lot of the life science companies. They need smaller teams to do it. They can process a lot more data than what they did before, and they can be a lot more accurate with their discoveries. Even more than that, what's exciting is they can even potentially have more different multiple drugs which they could also potentially run at the same time. So, and the really interesting thing about when the new US administration come in, all of them were scared about what RFK would do. And the funniest part is now they're complementary, because one of the first things they try to do is they're trying to streamline the regulatory process as companies go through their different sort of trial phases. So, and that's in both humans and also for pet, for sort of pet companion sort of products. So to me, that's probably, and we're fortunate enough, we've just, done a deal with MTP Connect, which is our industry life science accelerator. I think that's, and Australia is world class when it comes to life science research and also drug trials. So that's probably for me a sector which I think has a lot of opportunity for investors, which previously they would have avoided because it's not as sexy as the high growth sort of SaaS company. But when life science companies win, they win big.
Actually, I've got a giant tip for you in that area. We invested in a company that builds organoids. What is an organoid? An organoid is a tiny little version of a lung or a heart or a brain or something based on human tissue. And it is, if you test any kind of medicine on animals, it's only 10% efficient, the output. So literally millions of animals die completely needlessly every year, which annoys me as an animal lover. These organoids replace the use of animal testing with human tissue testing, which is so much more effective. It's 10x more effective than testing on animals. And the time to market is then years less. So the gift, we all hate COVID because of the horrible time when we had to all wear these masks, but the gift that COVID gave us is it accelerated the pace of approvals for clinical trials magnificently. So now we're in a situation where instead of 5 or 7 year trials, we're now down to 2 or 3 trials because people realized that the last period was very, very inefficient. You combine that with organoids technologies like the one that we just invested in, this is going to create massive new products and accelerated entry into massive new markets for medicine. So I agree with you. I think healthcare is absolutely worth watching as well.
I was going to say, funny enough, our latest company that we worked with that become a unicorn, we worked with them when they were a seed company coming out of Monash University. They just hit the $1 billion mark, I think it was last week or 2 weeks ago, and they're a 4-dimensional lung imaging technology company. There's another one that we work with called EBR Systems, which is also ASX listed. Andrews actually lives in Dubai. Their company, we've worked with them since they were 130 million market cap. They're now up to about 700 million. They just had their US approvals, the sort of FDA approvals for basically the next part for them is the reimbursements from the insurance companies, and that company is very likely to be our next unit. And all it is instead of a pacemaker, it's a wireless pacemaker. So it's a tiny sort of implement that they put into the heart. So everything's getting smaller, easier to insert, and once again, highly scalable.
I'm very excited to follow the journey of that company, well, both the companies, to be honest. Well, I have one last segment, and I want to turn the focus towards the institutional investors or the LPs in itself, and really open question to whoever wants to go first. But when it comes to family offices or institutional investors, when they're considering engaging with the venture capital ecosystem here and or making investments into the private markets here, what makes this region, this market in the UAE, the MENA region, that much attractive to LPs right now, as per you?
Oh, I think it's really obvious. If you're I go to family office events around the world. Last year I was in Guatemala, I was in the US and several places. I was in Africa, I was in Europe. So I've met with family offices everywhere. What distinguishes the opportunities here is you can directly get involved with founders here without having to push 100 VCs out of the way to get to a deal, which is fantastic. It's going to be different 5 or 10 years from now, so make the most of it. Get into the opportunities that are in front of you right now. Why? Because this is the key growth period right now, but also you can get access to those things. In Singapore right now, there are 150 venture firms that can write a Series A check. 150. In Jakarta, like 15 years ago, there used to be 10, and now I think there's 50 or 60 in Indonesia. And so now, as a family office, you're facing massive competition to get into these deals. Here, there's still relatively, the ecosystem here is growing quite fast, but there's still only really a handful of real VCs. So the opportunity for direct investments for family offices and for institutions here is phenomenal. So take advantage of that while you can. Invest while there's this less competition and while we're still at the start of this massive growth cycle.
I'll go a slightly different angle. Obviously, I deal with a lot of international companies. The thing I would love to see for the international companies that come to this region, I think there's a great opportunity to invest and then also add strategic value. Often we see companies, where they just raising capital is one part, but I think there's often networks that you would have, that the LPs would have, the GPs would have, or if it's a strategic investment from a family going into, or even a CVC, they can add significant value to that company in this region. So you can effectively invest into companies at lower valuations than what you'd get if it was let's say, for example, a US startup, but then add effectively your networks, your skill, your experience to actually amplify their success of that business in this region. So effectively, you can manufacture value in the companies that you invest into just by your sheer networks actually in this area. So the role that you can play with, I think, international companies coming into this is they all want to be here. And also, obviously, Dubai Chambers wants them to set up businesses here. And I think those two forces align quite well.
Very, very well put. And I think we're at time, unfortunately, or I could sit here asking them questions all day long. But John, Steve, thank you very much. And guys, can we have a round of applause for the two of them? Thank you.